So HMRC is introducing a single merge scheme for both SMEs and large companies, which will come into effect for companies whose accounting period begins on or after 1st of April 2024. There are currently two schemes of relief, one for SMEs and the R&D Expenditure Credit Scheme, referred to as RDEC, for non-SMEs or for SMEs to claim under in certain circumstances. The way the tax relief is provided is a little different. The SME scheme works by generating an additional deduction in the tax computation. The RDEC scheme works by recognising income for a notional R&D credit, but then deducts the credit against the tax liability to give a net reduction in the tax liability. The single merge scheme will retain the mechanics of the RDEC scheme, which is better to recognise the value of R&D in the accounts, and this improves EBITDA. With the phased introduction of the single merge scheme, phased because it's based on accounting period start dates, we will be in a situation where we have the legacy 2 regimes running alongside the single merge scheme and loss-making SME R&D intensive scheme. And because of differences in the rule base for subcontract arrangements, further nuances present in terms of who can claim relief, which I'll briefly outline next. For subcontracted activities, HMRC's starting point is to put the ability to claim relief in the hands of the company that subcontracts out the work, the principal, not the party that does the work. However, deviations from this starting point are permitted to ensure the ability to claim R&D tax relief ultimately rests with the party that took the decision to initiate the R&D and assumed financial risk and reward for the outcome. This is different for the two legacy schemes we are moving away from, and there is ambiguity in this area and risk of double claims for relief where you have one of the parties to an arrangement which could each be subject to the different regimes, i.e. the legacy regime and the new single merge scheme. So legislation has been published to deal with this scenario, which effectively appears to say that the position of the party to the arrangement who is governed by the legacy regimes overrides the rules per the new single merge scheme. As with tax, anything in tax, the facts of each case supported by contracts and other evidence will need to be carefully evaluated to work out who can claim. There are new rules around subsidised expenditure. Currently, costs that have been subsidised by grants or other parties cannot be claimed under the SME scheme and are instead claimed under RDEC. Under the single merge scheme, it does not matter whether costs have been subsidised, and this is welcome news as R&D tax relief will now supplement any grant funding or other subsidies received in respect of investment in R&D. For third-party workers or agency workers, the R&D tax relief is to be limited to a relevant proportion of the wages paid to them under their PAYE scheme. And finally, from 1st of April 2024, we will have the requirement for all work to be undertaken in the UK. Very limited and nuanced exclusions apply. The next slide summarises the policy updates for you that I've just run through and when they will take effect. If you would like to discuss how the changes might impact your claim or would like further support with your claim during this transitional period, please get in touch to book a one-to-one. Contact details are on this slide. Thank you.